If you looked at grains alone this morning, you might think things are stabilizing. Corn is pushing higher, soybeans are only slightly lower, wheat isn't collapsing, but cattle just took a punch. Feeder cattle were down hard. Live cattle followed. Hogs softened, and crude oil is sitting in a spot that could go either way. So here's the real question. Are grains quietly building strength, or are they setting up a trap while livestock margins start tightening? Let's map it out. Good morning. This is Boots and Bushels, your daily look at the markets that feed America. We're using where futures were trading near late Thursday afternoon as our guide. As always, this is about awareness, not advice. The goal is to identify the pressure points before they identify you. Today's three big things: corn showing life, cattle taking heat, energy hovering at a pivotal level. Let's start with grains. Corn is trading near 443 on the session, with a high of 445 and a low near 440. That's not explosive, but it is constructive. Here's the interesting part. Volume is solid. We're not seeing a thin, sleepy bounce. There's participation. The pressure point here isn't price, it's momentum. Corn has been grinding sideways for weeks. Every push higher stalls, every dip finds buyers. The risk? If corn finally clears that mid 440 ceiling with conviction, we could see short covering fuel a quick 8 to 12 cent move. But if it fails again near the same resistance zone, this becomes another failed rally, and failed rallies tend to unwind faster than slow climbs. Right now, corn feels stable, but stability inside a tight range usually means energy is building. Soybeans were trading near 1163, down about 2 cents, with a high of 1172 and a low of 1145. Beans tried to push earlier, but couldn't hold it. That upper 1170 zone continues to reject strength. Here's the concern. Soybeans are not responding aggressively to bullish attempts. They're holding, but they're not surging. That suggests buyers are cautious. If export demand doesn't accelerate or weather doesn't intensify, beans may struggle to build sustained upside. Right now, soybeans look balanced, not broken, not breaking out. Balanced markets can turn quickly when a catalyst hits. Chicago wheat spread trading near 23.50, down about 50 cents. Wheat continues to feel heavy. Unlike corn, wheat hasn't shown the same resilience. It lacks upside enthusiasm. If global supply chatter increases or weather shifts, wheat could catch a bid quickly, but at the moment it's not leading, it's reacting. That tells you speculative money isn't crowding into wheat yet. Now this is where things change tone. Live cattle for April. Live cattle trading near $236, down about 330, with a high of 240 and a low of 235. That's a meaningful slide. This wasn't just noise, this was pressure. We've had an extended bullish run in cattle. When markets climb for weeks, it doesn't take much to trigger profit taking. The key question is this correction or rotation? If cash stays firm, futures could stabilize quickly. But if this sparks broader liquidation, leveraged longs may step aside, and that accelerates momentum lower. May feeder cattle. Feeder cattle trading near 355, down roughly 5. That's sharper. Feeders are more sensitive to input cost expectations, including corn. Here's the interesting dynamic. Corn was slightly higher. Feeders were sharply lower. That suggests the move wasn't purely feed cost driven. It felt like positioning. When a crowded trade begins to unwind, it rarely announces itself politely. The risk here isn't collapse, it's volatility expansion. Lean hogs are trading near 95.65, down about 55 cents. Nothing dramatic. Hogs remain range bound, but notice the broader livestock theme today. Cattle down hard, hogs softer. That's a tone shift, and tone shifts matter. Crude is trading near 65.47, up about 5 cents. Crude is sitting in the mid 60s. That's a pivot zone. If crude pushes above 67 with follow through, it reintroduces inflation and input cost concerns. If it slips back towards 62 to 63, it signals softer global demand expectations. Energy is not screaming direction, it's waiting. And when crude waits, agriculture listens. Now we're approaching the seasonal transition window for weather. Early planting decisions are forming. Soil moisture conversions are starting. Right now, there's no widespread crisis. but we're entering the time of year where forecasts begin to move markets faster. Weather doesn't have to be extreme, it just has to shift expectations. Watch for extended dry patterns in key growing regions, sudden cold snaps, early spring storm systems. The market reacts to change, not comfort. In ag news, recent export flows are steady but not explosive. If global buyers hesitate, corn and beans may struggle to sustain rallies. Demand doesn't need to collapse, it just needs to stall for momentum to cool. Our second story, with cattle futures under pressure, the next few sessions will reveal whether this was technical or fundamental. Retail beef pricing and wholesale movement will matter. If demand remains solid, this dip may be brief. If margins tighten downstream, futures could fill it. In story number 3, geopolitical headlines continue influencing crude intraday swings. Energy volatility can spill into fertilizer and diesel expectations quickly. Producers planning spring work should be watching this closely. Here's what stands out this morning. Grains look stable, maybe quietly constructive. Livestock showed vulnerability. Crude is neutral but leaning toward a decision point. When one sector wobbles while another steadies, cross-market shifts often follow. The biggest risk right now isn't collapse, it's complacency. Corn could break higher, cattle could stabilize, or we could see a margin squeeze develop if feed edges up and livestock continues to soften. The market hasn't chosen its direction yet, but it's getting closer. That's your Boots and Bushels morning map. If you found this useful, make sure you're subscribed so you don't miss tomorrow's breakdown. We'll keep watching the pressure points because calm screens can hide tightening margins. Thank you for watching Boots and Bushels.